The world is changing fast. New technologies are impacting how we think about products, services, and the way we live our lives. Nowhere is this trend more present than in financial services, where new business models and customer expectations are changing our conceptions about banking, finance, and the very nature of money. Welcome to Rebank, a visionary podcast about banking, fintech, and the future. The future of banking is here.
Hello and welcome to Rebank. I'm your host, Will Beeson. Today we're thrilled to be joined by Hiroki Takeuchi. Hiroki is the founder and CEO of GoCardless, a London-based fintech that simplifies recurring payment collection for businesses. GoCardless has raised $47 million to date and is backed by the likes of Balderton, Accel Partners, Passion Capital, and Notion Capital. Hiroki and his co-founders, including Tom Blomfield, now of Monzo, who joined us on the podcast way back in episode 17, went through Y Combinator early on, and have some interesting stories about that experience. Today's conversation covers a number of topics, some of which are quite challenging. Hiroki is an exceptional entrepreneur with a powerful story. Check out the show notes at www.bankingthefuture.com for links to the articles mentioned in today's conversation. If you enjoyed today's episode, please subscribe on iTunes or your podcast platform of choice and leave us a review. Thank you very much for joining us today. Please welcome Hiroki Takeuchi. Hiroki, welcome to Rebank.
Thank you. Thank you for having me.
You founded GoCardless in 2011. How did the company come about?
So for us, I think that it was really a journey of discovery. What we're doing is quite a niche play in many ways. So it's not something that you would have necessarily stumbled out of bed and realized was a problem. So the way we actually started the business was slightly differently, focused on informal groups that wanted to collect payments, and that was a problem that we each had as founders of the business in various guises. But as we went through that journey and sort of built the first version of a group payments product and learnt more about payments themselves, we kind of quickly realized that there was this much bigger problem in the market, and in particular what we saw was that the predominant way of taking payments online, which was using credit and debit card, wasn't the right way to do it in every use case. And at the same time, there were the systems like direct debit, which were really great for the use cases that we were looking to solve. And we kind of figured, okay, well, if we could bring that into the 21st century, build great technology on top of it and open up access, maybe there's something there. And that's really the genesis of GoCardless.
Mm-hmm. We, on the podcast, got into a little bit of the GoCardless story probably over a year ago now, when we connected with Tom Blomfield, now founder and CEO of Monzo, who was a co-founder of yours at GoCardless, right?
Yep.
And maybe to refresh everyone's memory, I think, so you guys went through Y Combinator relatively early on, didn't you?
Yeah. So
what was that experience like?
It was great. I'd already been kind of exposed to the YC world a few years earlier when I interned at a company that was going through YC at the time. So I was kind of quite aware of the value proposition, and I guess I'd been bitten by the bug. So I was always super keen to go and do that program. But yeah, actually going through the program itself was a great experience. It was being exposed to some of the greatest minds in tech. Getting advice from some of the smartest people I've ever met. And really also there was a huge amount of value to the brand of YC as well, and that definitely helped us whether it came to fundraising or hiring. It's been a great asset along the way.
Mm-hmm. I could be totally off base here, but the company that you mentioned interning at, was there any connection with Stripe? Or
yeah.
Stripe
so it was
founders?
actually so the company I interned with was called Automatic, and it was set up by a couple of friends of mine from my university days at Oxford, so Kulveer and Haj, but they joined forces with Patrick and John, who and the four of them were building this thing called Automatic. And that obviously Patrick and John went on to build Stripe and are doing a phenomenal job over there. We kind of keep in touch from time to time. But yeah, it was a great experience to see that in those early days.
Well, it's crazy what a small world it is in, I guess, all of fintech and maybe payments even more so. Did that first company kind of inform any of your thinking or your interest in the payment space?
No, not at all. I mean, Automatic had nothing to do with payments, right? They were
a pure coincidence that you and the Carlsons went on to found payments companies.
Yeah, absolutely.
Wow.
I mean, we didn't really explicitly set off to start a payments company, right? When we were doing YC, it was around this kind of group payments tool, right? So it was very far away from what the guys at Stripe are doing. And I'd still say that what we focus on now is quite different from the direction and the focus of those guys. So, it's just a pure coincidence, I guess.
Wow. Digging a bit deeper into the GoCardless business model, and you mentioned that early on you guys identified a couple specific use cases that weren't kind of optimized through the card payment rails. Can you give us some examples of what sorts of experiences, either those early on or the sorts of the type of business you do now that's best done through direct debit? Yeah,
absolutely. So we really focus on recurring payments, and for us that kind of falls into three main categories. So you have subscriptions, you have installments. So when you're paying off a loan or something like that. And then finally, we have invoice payments. A merchant that's invoicing their customers on a regular basis and collecting payments for those. And I think that one of the, I guess, initial insights that we had was that we found it strange that when you looked at these business models being operated at scale on a national level, direct debit was always the predominant way of making these payments, right? So if you're paying your gas bill or your mobile phone bill, that's always via direct debit, right? You pay your Sky subscription, direct debit, but then you look at companies that have got a more global footprint or companies that are at a smaller scale, and none of those are using direct debit. And that was really where we kind of had this sense of, okay, well, why is that? And as we've been building the business, what we've realized is that, a lot of it's to do with access to these systems. If you're a small business in many countries, it's just really difficult to get access. And, we're able to aggregate volume and build out really a hosted experience that enables us to ensure compliance, which means that we can open up access. And then for the companies with a more global footprint, it's really the problem is around these systems being geographically constrained, right? So each country or region has generally got its own direct debit system, and none of those they're all fundamentally similar, but none of them are interoperable. And as a result, it becomes quite impractical for a business that's got customers across 20 different countries to really adopt this as a system. So that's a big part of what we're focused on now, is building out that global network.
So for those out there who are maybe less intimately familiar with the way direct debits work, can you just describe in high level terms what exactly your product does and what makes it better for SMEs who understand your main customers than traditional direct debit options?
Yeah, so I mean, we work with quite a wide range of businesses, so it's definitely not just SMEs. SMEs is a big part of our business, but we work with really large companies as well. So we work with companies like Sage, the Financial Times, The Guardian. These are all companies that are kind of using our platform. So what we find is that the value proposition depends on the type of business. For the small businesses that you mentioned, it's really a question of access, right? So if you think about it, direct debit as a system enables you to pull money directly from someone's bank account. And the level of trust that you need to have in order to do that is obviously quite high. And as a result, banks have historically not really been able to open up access or give access to businesses unless they're of a certain scale to warrant the kind of compliance requirements and policing that's needed to operate the system. And so what we do is we've built technology that aggregates volume, and it also hosts a lot of the experience so that we know that these transactions are being done in a compliant way. And that enables us to open up access to these small businesses for the first time.
And then in terms of the global reach, so for the likes of FT and the Guardian and Sage, what does that experience look like?
So for them, it's more about the technology itself. What we're really doing, in many ways, is quite similar to what was done with credit and debit card payments with the likes of Stripe, but PayPal, WorldPay, Authorize.net. There's kind of been a few more versions of it having been done in that world, but it's really bringing those transactions online and making the system work in a connected world in a much better way. Typically what we find is with these kind of larger organizations is that they might already be collecting payment via direct debit, but when they move their business and their processes to the cloud, they find that their existing systems are no longer fit for purpose. And what we do is we provide a really simple API that connects with the software they use in the cloud in a really elegant way. And in that way, we're able to offer them a much better solution. So it's really around the technology.
Mm-hmm. So we're 7 years on from the founding of GoCardless, and a lot has changed in the payment space. The likes of Stripe, who we mentioned, and Adyen have flourished in parallel with GoCardless and others. How does the electronic payments acceptance and processing space look today compared to when you guys started? And how do you expect it to evolve?
I guess like the thing that I think is often mistaken is that everyone just thinks of payments as an individual market, whereas in our view, it's not really one market. It's a set of quite fragmented markets. And that's really key to understanding what's going on, right? So, when you look at the Stripes, the Adyens, the PayPals of the world, they're doing a brilliant job, but they're very focused on e-commerce and retail, right? Sort of one-off ad hoc transactions. And that's what credit and debit card are really well set up for and what they're built to do. There's a quite intense level of competition there. And, even within that market, there's quite a lot of segmentation. If you ask the guys at Adyen and the guys at Stripe how intensely they compete, they definitely compete, but actually they go after quite different markets. These are big markets that can sustain multiple players. I think for us, we're really focused on a slightly different market, which is around the recurring payment space. We've taken a somewhat unique view in saying, okay, well, we really believe that these bank-to-bank methods are the way to go, and what we're going to do is focus on those exclusively. And there's not really anyone else doing something like that.
How does PSD2 and open banking impact what you guys do? The concept of bank-to-bank payments being prioritized effectively.
Yeah, I think it's a really interesting time in that sense. For us, we see it as a big opportunity. We think of ourselves as enabling bank-to-bank payments, so direct debit is a version of that. What's happening with open banking and PSD2 will open up new possibilities there. I think that for us, it probably doesn't replace direct debit entirely. It's more around how can you use those technologies and those new protocols to really enhance the core processing that we do. So it's definitely something that we're looking very closely at and experimenting with, and we're quite excited about what's going on there. So, I think that open banking seems like it's much more tangible at this stage. PSD2 still feels like it's somewhat distant from reality. But if those things can come through, then we're very excited about them.
Well, I guess interestingly, to use your mental framework, if there's the one-off payment type stuff and there's the recurring payments that you guys focus on, and a lot of the thought process has been that PSD2 enables bank-to-bank one-off payments in a way that doesn't currently exist.
Yeah, and I think that's actually where I would expect. That's where I would expect the bigger disruption to be in many ways from a payments perspective, because when you look at the parallels, right? I would look at Ideal in the Netherlands, looking at things like Sephora in Germany. These are bank-to-bank payment methods that have gained massive adoption and have really supplanted the credit and debit card processing in their markets. Ideal, I think, has got around 80% penetration of online transactions, right? So, and really that's taking share in the e-commerce space. So I think that will be interesting to see how all of the e-commerce focused payment providers really respond to that. But I would anticipate that they're looking at it very closely.
In the second half of last year, you guys raised $23 million. First off, congrats.
Thank you.
What's the plan?
So for us, it's really around internationalizing the business. There's two parts to that. So firstly, it's about us building out the global capabilities. So, at the moment we can collect payments in the UK, across Europe, or the Eurozone, and then Sweden. And, we want to be adding the next 15 to 20 geographies to that capability set. So it's around the capability build, and then also it's around investing in the go-to-market efforts to follow that capability up. With growth into these new markets. So, that's the big part of what we're thinking about and focusing on as a business now.
Mm-hmm. Like many of the guests we've had on the podcast, you guys, I imagine, work with incumbent banks to access payment systems on one side, and you compete with traditional payment mechanisms, in a sense, on the other side. How do you think about your competitive advantages over traditional players?
So I think that, we don't really see ourselves as competing with the banks that much, in the sense that, sure, we take volume away from the banks sometimes, but where we do, generally speaking, it's not something the banks care that much about, right? Our experience is that most banks offer direct debit as something they have to offer and need to offer, as opposed to want to offer and really make meaningful profit or revenue from offering. So what we find is that even when we are taking volume away from banks, there's not a huge amount of grumbling about that. And what actually, in our experience, the banks care more about is making sure their customers have the best possible experience. And so, we'll have examples of banks saying, oh, look, we think that you shouldn't use our service, you should use GoCardless because we think it would be better for your business. From a banking relationship manager's perspective, that's a better thing to do because it makes the customer happier, which I think is really great. So we don't see ourselves as competing outright with the banks. And the other thing that I'd say is that a lot of the businesses that we onboard are really like moving away from quite different methods, right? So, on the SMB side of our business, a lot of it's moving away from bank transfers, checks, quite manual payment mechanisms, which and moving them to a more automated payment system for the first time. So, we're competing more with behavioral differences at that level than with competitors that already exist in the market.
You mentioned customer experience before. How important are experience and design to fintech in your view?
I think that I don't think design is uniquely important to fintech companies, right? I think that design is important to all products, right? And I think that this is something that's probably changed a lot in the last 10 to 15 years. And I think to a large extent, we should thank Apple for that, right? If you think about what the world was like pre-iPhone, things were generally designed pretty terribly and people would just accept it. I think that what we find now is that we're in a world where people expect a certain level of ease of use and simplicity in the products they use. and they've kind of seen what's possible, and that's really raised the standards across the board. So it's absolutely critical for us that we think a lot about how easy to use and simple our products are, and a big part of our value proposition is around that simplicity, especially compared to the existing options that were there before us. So it's critical, but not just to us as a fintech company, but I think to technology companies in general.
I'd say, and maybe I'm simplifying a bit, that successful payments fintechs like GoCardless do two things. They make it easier for business customers to get paid, and they reduce the cost of processing. That sounds like a powerful combination. Some other areas of fintech, including digital wealth management / PFM, mortgage tech, alternative lending, are struggling to convince the world that they have intrinsically viable business models. So those are generally B2C focused plays, and they're often around making it easier, smoother, more efficient for end customers to access financial services products. But they haven't always been that successful. There was an interesting TechCrunch article just this week written by Steve O'Hear about a B2C mortgage fintech called Burrow, who's pivoting to B2B. Basically, they haven't been able to get enough consumer traction via a digital mortgage origination model, despite how much easier it is for customers to use it. And therefore, they're kind of pivoting and offering digitally enabled services as a platform to incumbent mortgage issuers. How do you think about various fintech verticals and the characteristics of different verticals, be they B2B, B2C? Where can new business models really differentiate, and where might they think that through experience and design they can improve, but really it's too marginal to be deeply impactful?
I think that this is where, in many ways, the kind of the label of fintech falls down, right? The only thing that's really common across fintech is that we're all operating in financial services, right? But if I think about how similar our business is to other companies in the fintech space, not really at all, right? We have a lot in common with other payment companies, but if I look at someone that's offering loans or doing FX or building a bank, they're very different businesses. And I think that one of the interesting things is that about this kind of surge of fintech as an industry has been that I think it's just clubbed under one umbrella, mainly because people associate it with things that banks used to do, right? And as a result, think that there's some sort of similarity between all of these services. But I think that where the value of a lot of fintechs come from has been in companies going and taking specific products and being very focused on them and building great solutions just in a very niche focused space. And that's why we've been able to see sort of step changes in the either ease of use or the cost or whatever it is that's associated with these individual fintech companies' value propositions. So I think that to answer your question more directly, I think that it's not obvious to me that every financial service is equally easily disrupted, right? And I think that in many ways, this to me is similar to asking the question of why do some tech companies succeed and some tech companies fail, right? And the answer is if you can't figure out a product or a service that's 10x better than what came before it in some meaningful way, then you're going to struggle, right? And that's equally true of someone building an advertising technology business, someone building a consumer tech business, someone building a fintech business. So I don't really see the distinction of fintech in that question, I guess.
I think it's a really great answer, and I think people can learn a lot from reflecting on that. Getting paid and staying on top of cash flow are classic small business challenges. Are there opportunities for GoCardless to innovate in that space?
A big part of our business is helping small businesses that invoice their customers on a regular basis, and those are the top two issues, right? Is around cash flow being the sort of, and the impact of late payments on that cash flow being a really big issue. And what we do for these businesses is that we enable them to take a lot more control over that whole process. So rather than being in a position where I'm sending out invoices to my customers and then just waiting for them to pay them manually, which often gets waylaid, or someone's just feeling a bit lazy, or forgets to do it. And that is actually the main cause of these late payments. By setting up these direct debits and automating the collection, not only does it save a lot of time and effort from an admin perspective, but it also means you get a lot more certainty of when you're going to be paid. And that's a big part of why these businesses that use GoCardless come and adopt our service. So absolutely, it's a big part of what we do.
So you talk about invoices. Is that specific to recurring monthly, same amount?
No, not at all. No, I mean, we work with a huge variety of businesses, right? We work with about 30,000 businesses collecting payment through our platform every month. So, it is very varied. But, for us, the commonalities in that space are around, having customers that you're collecting payments from on a frequent basis. It might be monthly, it might be on an ad hoc basis, but it's frequent. And the amount might vary, but it's more about that recurring relationship.
Okay, so it works on an ad hoc basis too. How would that work in terms of commercial arrangements between your customer and that customer's customer?
The way a lot of this works is that through integrations with accounting packages, and what happens is that where say for example, let's take just an example, right? I pretend I'm a coffee bean wholesaler, and you're a cafe, right? I'm sending you coffee beans every week for your cafe, and then depending on how much you use or how much you sell, you'll be ordering different amounts every week, right? The way that it would work historically is that I would send you an invoice every month and say, okay, this month you consumed 15 kilograms of coffee, next month you might consume 20 kilograms of coffee, and then the invoice would change each time, but I'd be waiting for you to manually pay that, right? With GoCardless, the way it works is we would agree that you'd set up a direct debit mandate to me at the start of the relationship, and then every time I invoice you through my accounting platform, it would also automatically trigger a payment that would be scheduled for, as per the invoice terms. So say, for example, you've got 30-day invoice terms. It will say, okay, on day 30, we're going to collect this money directly from your account automatically via this direct debit. And then, everything kind of goes through on an automated basis from there. Okay.
And so I guess I then, as the coffee shop, have the opportunity to review the invoice when I receive it, dispute anything that I need.
Yeah, absolutely. Yeah.
Sure. Interesting. Switching gears, we mentioned Steve O'Hear of TechCrunch before. He wrote an extremely powerful article last year recounting a bike accident that you had and your incredible recovery and return to the helm at GoCardless. Most people couldn't bounce back from an accident like that, emotionally as much as physically. Would you be comfortable talking a bit about that experience?
Sure.
So, I mean, maybe you can take us back to that day for those who haven't read the article. You were cycling in Regent's Park and had an accident. Mm-hmm. And were immediately taken to the hospital. Mm-hmm. Surgery was performed very quickly.
Yeah.
And when you woke up, you didn't have control over your limbs.
Yeah.
What ran through your head at that point?
Yeah, it's kind of hard to remember in a way. I think you're kind of in a state of shock, right? I was lucky in that my wife, my family, my friends were all there very quickly. So they were there before I'd even gone into surgery. So I had a lot of support, and in many ways, it's kind of funny because like I actually look back on that experience of being in hospital in quite fond terms, even though obviously the circumstances were pretty horrible, and that was mainly because of I guess the level of gratitude that I felt towards the fact that I was alive. An accident like that, it was quite serious, and so it could have ended much worse, but also for the people around me, and so I wasn't really at the stage of being capable of really internalizing what had happened, and frankly, I think that probably still haven't fully internalized it. Right? I think it's I think these things are very long journeys, and it will probably take years. I'm not sure anyone ever fully internalizes and accepts something like this. So I think it's it was more the small things that I was kind of feeling grateful for at the time.
I'm particularly interested in the recovery journey that Steve related in his article, and the fortitude and the willpower that it sounds like you were able to bring to that in a way that I think most people wouldn't have been able to. I mean, I think that effectively waking up in a hospital with that sort of injury would put most people down for life. Many people down for life.
I think I'm not sure I agree with that. I think that I think people have a tendency to overestimate the difficulty of something like this. Not saying that it was easy, right? But I've met lots of people that have had accidents like this and have gone on to do amazing things and bounce back from it, right? Far more than I've met people who've let it, really destroy their lives. So I think that there's a huge amount of resilience that human beings have, and they just don't realize it. And I think it's not really possible to know that until you go through it. But I don't think that there's anything really unique about the way that I've responded to this accident. I think that many people would have responded in very similar ways. And what's a bigger influence on the way that I was able to respond was more about the support that I had from my family, my friends, from the company, from Matt, my co-founder, who kind of helped out with the business. Those are the things that enabled me to do this, not any kind of magic about me as a person.
So it did definitely come through in that article how amazing the support that the likes of those people you mentioned was. I think there was a story that Steve related in his article about effectively a board call soon after the accident, in which you made it clear that your intentions were to return as CEO. There was no doubt in your mind about that, and you got broad-based support from all of your investors, Passion, Notion, Balderton,
Yep.
which is just amazing, and that as much as anything seems like a reflection on you and their confidence in you to persevere and return to lead the company.
Yeah, they were great. I think that for us, we've always been very clear in our own minds about the importance of finding the right investors and not just finding the highest price. For me, the way that our investors supported me through this journey has really been sort of a strong validation of that. So that they were great.
Mm-hmm. Did this experience change at all the way you think about your life or your work?
Of course, in many ways, very profound ways. But I'm not sure I can even articulate them. I think it's it forces you to reset and rethink your life in many ways. And so in some senses, I kind of see that as being quite a positive influence on me. I try and see the the positive things that have come from this accident, as well as the, obviously you have to kind of reflect and grieve the negative things. But I think to paint the whole picture as purely negative is also, I think, wrong. So,
well, Hiroki, I'm in awe of your courage and commitment to your life, your recovery, and your work through all this. Can't imagine what it must have been like. But,
cool,
amazing.
Thanks.
Hiroki Takeuchi, what's the best way for people to find out more about your guys' work at GoCardless and keep up with you guys?
Well, I mean, we're kind of pretty active on Twitter, and then we have our website. So those are the two areas to kind of follow us, I guess. I have a Twitter account myself, but I'm not the most prolific of tweeters, so probably not going to get much from there.
All right, great. Well, Hiroki, thanks very much for joining us today.
Cool. All right, great. Thank you.
Thanks for tuning into Rebank. If you like today's show, reach out. Follow us on Twitter at Rebank Podcast and join the conversation. For more on banking, fintech, and the future, check out our regular content at www.bankingthefuture.com.